Hey everybody, it is the weekend of the 16th and the 17th of June, leading into June week 4 of 2018. I thought we'd take a look at the S&P 500. Maybe I'm starting a little too soon doing a midpoint review for the year, but I thought I'd do one just because it just seems like a good point to do it. We had a pretty significant day of trading on Friday, and it would just be good to go over some levels because when I look at my more simplified chart rather than that complex roadmap that I post every day that has all the little levels and minutia that we trade around, because as option traders we really need to be tight on those levels. Sometimes it's really good to back out and look at a more simplified chart and look at larger levels that have been really significant for us throughout the year, and also look at where we are at with the simple moving averages. So we're at both very key spot as far as price goes and very key spots for where the simple moving averages are. So let's just back up for a second and take a look at the year in review. I'm going to try and make this interesting and concise. Bear with me. Let's look on the left side of the chart here. Where we started out the year, over here on the left side, this red candle was the final trading day for 2017. As you can see, we had been trading above the 10-day simple moving average, which is this sort of like electric blue, bright blue line. And on the final trading day for 2017, we had a sell-off and push down through that. But we came in on the first trading day for 2018, trade opened right on that 10-day, moved up above it, and then we went on this rampage, this rally on up to our all-time high, culminating on January 26th when Trump gave the closing speech at Davos. We put in this all-time high at 2872.87. On the way up to this onto this high, we did have a little, at the end of the first week of the rally, we had a little 1, 2, 3, 4 days of consolidation around the 2742 level. Now, when we look on later in the story and look through this chart, we see that 2742 has been this level that has haunted us so many times. It has come back to beat us up. And it all started here on this little consolidation point here in 2018. This level had never been traded until 2018, so there's no history to it or anything like that, but I think it has to do with whatever was going on here in this first little consolidation point. I think maybe this was a spot where maybe people, fund managers were like, holy shit, maybe we were starting to get some good news about that the tax cuts were really going to pass and everything. So they held things sort of sideways while they got in and out of certain positions, and then ever since then have sort of used that as a dividing line for where they get in and get out of the market. So we took off from that 2742 to our all-time high. And then on our way back down, what's the first thing? What was the first warning sign? That was this break of the 10-day simple moving average as we got into the first week of trading for February. Last couple of trading days of January and the first few days of trading for February. We put in 3 days where we sort of sat in this little island, this little gap island here that has not been visited since. And 3 days in a row where we closed underneath the 10-day simple moving average. And on day 4, that started a new week. And by this point, we would be getting into February week 2 for options, and we just sort of liquidated down from there. On February 5th, in fact, this was a really significant day. What was the level that we came in and opened at? 2742. That was the day, that was the worst day of the whole year. I mean, that was like the worst day for trading the whole year. Look at this range. This range went up to a high of what, like 2763, and the low of the day was down at 2636. I mean, 130 points on the S&P 500 in a single day. That was quite breathtaking. And really what it was that we came in, we opened on that 2742, and once we broke this 50-day, that was all she wrote. And then speaking of the 50-day, we can look at that. look at it in its relationship to what ends up being our halfway back, and you can see that basically when we broke that 50-day, we a little bit more than doubled down on losses from there for the year, because here's our halfway back point in the end that we can mark off the midpoint between this low and this high, 2702, and you can look at it in relationship to where this 50-day line is, and you can see that once that was broken, we did a little bit more than a double down from there. Okay, so off of this low at 2532, we bounced. We came up here to at the end of February to a high, up here around 2780 or so. Sounds familiar, right about where we're trading right now. And then we fell back down to create the original March low, which in and of itself ended up becoming a key level later on. But let's stay focused on this 2742 level instead. Okay, bounced off this March low. We come up here right to the 50-day, which happens to also be at 2742 at this time. And it takes a gap up open to get us over the 50-day and over this 42 level. And what's significant about this little set of trading candles up here is because this is what we're going after now. This is what we all refer to as the bounce high. I refer to it all the time. I round it off to 2802 because it's easier and takes up less characters when you're writing a tweet than saying 280198. When you see people talking about that, quote unquote, that 2802 level, this is what they're talking about, this failed high. So this was a failure to take out the all-time high. We sort of like basically overthrew the 2800 level and fell back from there. And we can draw a downtrend off of the all-time high and have it run through this and run through here. And you can see that the breakout that we've made in May and the back test low that we made at the end of May, just before we got into this current leg of the rally, was a breakout over this trend line, a back test of it, and then here we are at now. Okay, but anyway, we're back here at 2802. We failed down here. We break this March low, creating yet another new March low and a back test against this low that we made for the year back in February. Our bounces just sort of flatulate around in here, like doing nothing. Finally, here in May, we, this rally off of the Warren Buffett comments about Apple and everything, when he came in, when we came in the morning of May 4th, and you had Warren Buffett on the screen talking about how he had, he was about to have his big annual shareholder meeting that weekend. And he was talking about that he had bought a significant amount of Apple, increased his holdings in that, and that he owned about 5% of it at this point, or that he was working towards fulfilling a goal of having 5% of it. I'm trying to get rid of this drawing tool that I've accidentally enacted. Okay, so we bounce up here into this rally in May. This is right about when the service first started out too. Was right around here at the end of April and the beginning of May. So if you guys have been with me since the beginning, you remember this first rally that we went on here, and it topped out at what? At stupid 2742 level, and came back here, and we started monkeying around with the 10-day simple moving average, and lo and behold, what did that end up doing? We ended up hitting 2742 one more time, and then breaking down and going back to test the 50-day and this downtrend. And then from here at the end of May, we made this breakout. On June 1st, we reached just below 2742, and it took a gap up open on June week 2 to get us over 2742. And from there, here we are in this area between 2742 and 2802. Are you still with me? You're not bored to death yet? Good. Well, here we were on Friday doing this thing, messing around with this 10-day simple moving average. Now, we didn't close below it. All we did was an intraday trade down through it with a very, very long tail, like a very interested buyers, as though to say, this is really just, we're just trying to run people out of town here. We really don't mean this. Rallied it back quite significantly to end the day almost at the highs. What we need to see happen next week now is we can't sit sideways, because what's going to end up happening is that the 10-day simple moving average, it's on course. It's going to keep on going. If you count up the last 10 days, or if you just look at the last 10 days, at most, all it can do at this point is flatten. So unless we go up a little bit and just sort of flatten along for a while and then wind up breaking the 10-day and falling back down, we've got to keep moving up. We have to stay ahead of the 10-day simple moving average line. Otherwise, we're going to get into a thing like this again, I'm afraid. All these breaks, all of these rallies, you can see what happens when they break this 10-day. And you can see here, we move up and we break the 10-day. And we come up here and we break the 10-day. All right, we don't want to break that again unless, unless you're out there hoping and praying for lower prices because you want to get more invested. If you have been buying stuff over the last 2 weeks, you do not want to see this 10-day going down. If you've been watching the rally with disbelief and have not been getting invested, then you do want to see it go down. All right, so what happens if the 10-day does go down? Well, we have our 2742 level here that, as we look left once again, you can see that that's been really important for us to stay above. Our 20-day simple moving average is moving up through it. Down below us right now, we have our 50-day about to cross on up through the 100-day. This is usually, when taken at face value, this is a huge buy signal. The only caveat I'm giving it right now is that the 100-day is sinking. But if this 100-day ticks flat, is ticking flat or beginning to tick up the day that this 50-day crosses up through it, that's gonna set off a buy signal. If it is still descending on Monday, Tuesday, when this 50-day crosses up through the 100-day, maybe it's going to generate an overbought signal instead. And maybe we will get this break of the 10-day, and maybe we will come down here and test this 2742 level. There is still an unfilled gap to the June 1st close. So when all is said and done, we could simply do something like that. But let me tell you, we cannot close back below this 2742 level. I have the feeling that if we do that, we're going to be back testing all the way down in the end to the 200-day simple moving average one more time before we take off and on our journey for the second half of 2018. And that's okay too, but let's just put it this way. We are weekly options traders on the S&P 500. We want to stay above the 10-day simple moving average. When we break the 10-day simple moving average, we want to be in puts or we want to be in short calls, and we want to be focusing on this 2742 level. When we get down to 2742 level, we can start considering being long calls or short put spreads, focusing around this 2742 level. If we break this, then we want to start looking at puts again, and we want to start aiming at 2700, where the 50-day and the 100-day are at. And actually, the 50-day is going to cross up through the 100 days. So, over the course of the next couple of weeks, it's probably going to make its way up towards 2720, 2725 or so. So then that's going to become the next line in the sand. And if that goes down, then we're going to be looking at that move all the way down here to the 200-day simple moving average. That's rising pretty quick. It's at 2655. Maybe in another week or so, maybe it's 10 points higher. Maybe it's at 2665. That rhymes a lot with our 80 handle rule. A break of 2680 would get us to 2660 to 65. That would make a lot of sense there. On the upside, though, if we are going to be bullish now, next week, I know I bought calls on Friday. It felt bullish to me. It felt like this had taken care of some business that needed to be taken care of. Next week, we have the Russell rebalancing at the end of the week, so maybe we have one more shot that needs to go higher. Maybe there will be money rotating out of the Russell and into the S&P 500 next week to avoid damage that occurs when they rebalance the Russell. So that's another catalyst. Plus, like I said, we're going to have this 50-day crossing up through the 100-day. So if that goes according to plan, and I know I positioned myself for that plan going into Monday with 2790 calls, we're looking for the move through 2802. We're looking to go after these gaps and things. These are all levels that are marked on the roadmap, so you don't have to worry about it. They're on the roadmap I post every day. And ultimately filling this final gap in up here that happened back in January and going after this all-time high. In terms of a longer term target that we can look at, every time I try to tinker with the chart here in Thinkorswim while QuickTime is shooting this screen capture, screen recording, I end up freezing up my program, so I won't try and back it out, but I'm pointing up here in the upper right-hand corner of the chart at 29.52. What this is a measured move. If we've spent so much time dancing around this 27.42 level, what if the market is trying to tell us that from this low to 27.42, we will double up from there? That would take us to 29.52. And that would make 27.42 our halfway back for the year and would give us a point in, sort of like a line in the horizon to use to come back to in the future on a future correction. But if we're going to stay bullish and we're going to move up through 28.02 and we're going to move up and fill those gaps and move to a new all-time high, we're going to be shooting against 29.52. That would be a simple doubling up on the year from taking out this 27.42 level. Okay. Anyway, and in getting to that 29.52 level, I'm certainly not saying that that's going to happen in short order. That's something that I would see. I can envision that we could get through this 28.02 level, and we could spend the entire summer kind of vacillating between 28.02 and 2900, trying to get past this all-time high and getting up there and falling back and up, back and forth, and back and forth. We might shoot a little bit over 28.02 and come back down and test 27.42 one more time before taking off. But in the end, I think as we get towards the end of the year, 29.52 gives us something to shoot against. And if we surpass this target, this 29.52 measured move target, then we're obviously looking towards 3,000. Because when we incorporate in the 80 handle rule on even bigger scale, getting past 2,800, our next logical point would be 3,000. But what we've got to get through is we got to get through 2850. We got to get through 2,900. We got to get through 2,950. We got to get through 2,960 to 65, 80, and then to 300. So this would be sort of like our last mile marker for the 80 handle rule that gets us to 3,000, from 2,950 to 3,000. Okay, I hope that all made sense. I hope this wasn't too boring. I hope this gave you something to think about. Once again, to summarize, we need to get through 28.02. That means taking out this bounce high here and shooting against our all-time high. There is, of course, the potential that we might make a double top against our all-time high and come back and back test 28.02. And if that breaks, I would say 27.42 has shown us to be a very key level all year long. Let's see if it continues to haunt us in the second half of 2018. But maybe what that will be is our underlying support, rather than this sort of place where we came up to and resisted most of the year. Instead, let's have that become support and hold us up and support us towards this 29.52 goal. But if it does go down, then we're going to be going ahead and looking back at where our SMA is at and working our way back down to 2,700, maybe even 2,650 or so, or wherever our 200-day simple moving average is at the time when we start to correct. Okay, have a great rest of your weekend. As always, good luck and good trading.